Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And welcome into Market Talk for this Thursday, November 18th, live from the National Association of Farm Broadcasting Convention in Kansas City, Missouri. I'm your host, Jesse Allen. Thank you for joining us. MarketTalkAg.com. That's our home on the web. MarketTalkAg.com is where you can find us, all of our streaming sources, social media, and much more. Joining us in person today, it's always great to catch up with him every Thursday and Monday. Well, it was Thursdays, then became Mondays, and we talked to him a lot, but good to see him in person. John Heinberg with Total Farm Marketing. John, how's it going, my friend?
It's going well. Great to be back in live here in terms of at the NAFB, especially after a year off last year.
Yeah, definitely. A year off last year was really it was just different. It's the virtual world. We've learned how to use it. I've obviously learned how to use it with this show, and we do the video portion of the show a lot. But definitely great to be back in person. That's for sure. Let's look at the market trade today here, John. And I think to start, we got some news with RINs on the ethanol side. Corn's fairly flat today, but still got some news there that I think is important to look at. What did you make of the administration kind of just kicking the can down the road again?
Well, that seems to be the kind of the trend in terms of that EPA announcements or the lack of announcement overall here again today, and it's something that neither one groups like, whether it's the ethanol industry or as well as the oil industry. Some clarity would be nice in terms of figuring this out. Obviously, we had a market that was pretty strong this morning. Not sure if that was the actual trigger that brought prices down. It was probably highly anticipated. We've had talk for about a week or so now that this announcement was coming and it wasn't going to be friendly for the grain side of the equation. But it doesn't help. And when we got a market that was moving as quickly as it was yesterday with those outside monies flying in and out very quickly, any type of negative news can be a sell signal. We'll see where we close. If we stay soft right into the bottom of the day, at the end of the day, that'll open up maybe a little bit of technical selling possibly tomorrow. We do also obviously have a short week next week with the Thanksgiving holiday. We've had a good run in some of these grains, so it might have been an opportunity for some profits to start moving to the sidelines, and that might be something we'll have to watch going into next week.
Soybeans down fairly hard today, some double-digit losses there on the trade. What are you making with the soybean market on Thursday? And I know weekly export sales, we could talk about that as well. I didn't really take a hard look at those numbers, but is this more just a correction, or we just bump it up against that glass ceiling in soybeans, John?
Market may have got a little bit over its skis, especially that soybean meal market. That thing has been rocketing higher since we moved into the month of November here, and there's some good logistics reasons behind that. Obviously, talk yesterday about looking at the Argentina weather going forward. World's largest exporter of soybean meal. If they do have some La Nina impacts and some dryness concerns in December and January, that'll influence that market. And maybe we saw some buying because of the shortness or the cheapness of the value of that market. Going into this month. So that's something we'll have to watch, even though right now that crop is off to a pretty good start down there in Argentina, given some of the early weather. So again, it's a futures market. We play that for a reason. Plus also at the same time, meal became a value compared to other feed sources here domestically, and we started seeing some feedlots and end users step into that market and secure supplies here, with that fear of maybe possibly higher prices down the road, and that just kind of sent us into a short covering rally, as that meal market's been the backside of the soybean oil trade for basically the entire year.
Yeah, and I think about, bean meal, bean oil, and we saw a little bit of a flip in that trend earlier this week, and then we kind of flipped it back, and we're just kind of seesawing around, but there's a lot of strength there, despite maybe a little weakness here on Thursday. There's still a lot of underlying strength in both the meal and the oil markets right now, John.
Very much so. The product market has been very, very good, and that also carries over into the crush margins here for the soybean crusher. That's some of the reason we see good buying strength. If there if there's profitability there on the crush, whether it's from oil or from meal or both products in that regard, they're willing to pay up for what they need for beans if they're making a profit. We're seeing the same thing on the corn side with the ethanol grind. Again, some of the most active in the cash market in terms of securing supplies has been the ethanol grind. In that case, good margins there as well. Something they haven't seen for a while, and they're aggressively trying to lock those margins in and secure corn supplies. And the same thing's happening in that soybean complex as well.
Weekly export sales, you see anything of note there today?
Corn was solid, and this is not the window we typically sell a lot of corn, but there's been more chatter that in terms of activity in the corn market. I'd say the bean market still stays as the main focus, 1.3 million metric tons, okay number for this window. I like the shipment number at 2.3 million. That's good to see those bushels moving out in that regard. There's still going to be some concern here. Again, we talk about that South American crop in Brazil. In fact, we just saw some numbers. They're 78% planted on estimates versus 68% last year. So they're well above pace, and that's going to probably bring some beans into the pipeline early. So that's a concern of the market here, that those cheaper Brazilian beans are going to be here ahead of schedule this year, and that could cause some issues on the demand front. So we'll have to kind of keep an eye on that going forward, because right now, as we look into January, February, March, U.S. beans are not competitive on the export side of things compared to those cheaper Brazilian beans. So the weather going into the first of the year will be very key to make sure those beans fill out down there, and that could have some issues on the market longer term.
Yeah, and I know you alluded to this and mentioned it, that planting pace in South America is doing well, ahead of schedule, ahead of the averages. And, we're watching La Nina and the weather down there, and I know there's some talk that maybe after some of these rains we could dry out a little bit, but I think it's one of those cases where, the crops in the ground, it's going to take a lot of dryness to really give us an issue down there.
They're off to such a great start. Conditions are very, very good. In fact, some of the private analysts have now moving that crop up into the 145 million metric tons, maybe some whispers up to 150 if things continue to hold together. That's just a lot of beans for the world to absorb. Now, with that, the demand is still strong internationally, more than just China in that regard, but, they've been active buying some beans here. A lot of chatter. They're working the markets right now for both U.S. and Brazilian beans going into the first of the year. So the key is going to be if they hold on to those sales or do they get cancellations, looking at the cheaper grain. The Chinese are value buyers, and right now the way the markets are setting up, the value is probably going to be in those South American beans. So that keeps me cautious, even though it's beans. And when we got some things moving and the money starts flowing, things can take off like we've seen this week. So producers need to start looking at situations here and make sure we're protecting themselves at the same time, trying to keep those opportunities to market open.
Wheat markets today, we started strong. We're still fairly firm there as we close out, but we saw new contract highs, Chicago, KC, and Paris. I look at this wheat market, and I know the dollar, we've had that surging higher as well this week. I feel like this wheat market, we know it's got that fundamental story that there's just a shortage of global quality milling wheat, and I think that if we have our up and down days, we're going to have those, but really overall, there is just a lot of bullishness in this wheat market despite an up and down day here and there.
Yeah, that wheat market, if you just look at it, we've really pegged in some nice gains here, and especially in the last couple of weeks here, again, as the money keeps to push it. And you mentioned it, the global exportable supplies of high-quality wheat are very, very tight, and that's what's got the end user trying to secure those supplies, and they're willing to go ahead and bid up for those products. We look at, again, the milling wheat prices, new contract highs again today. That's been translating over into U.S. prices as well. Even though today we're trading 20 cents or so off the high, but again, new contract high. If we stay a little bit positive on the close, that still keeps the door open for probably some more movement higher. Now we're getting over $8. It's starting to get pretty pricey in that regard historically, so we'll have to see how things play out. But the wheat market is one. If the money wants to continue to own it, we've seen pretty big spikes in price, and again, great opportunities for producers out there if you're looking to raise some wheat this year to get some marketing done. Protect historically good prices.
Well, I think about a lot of those growers, in the northern plains that, or some of the other fringe areas where they maybe gone to some corn or gone to some more soybeans here in recent years. I have to think some of those traditional wheat growing areas, they're going to go back to that this year, just with where the prices are at and where that profitability is at, John. I know this fight for acres is a big conversation going into 22, and I think we're going to see a lot more of these areas that traditionally grow a certain crop. They're going to go back to that traditional crop.
That's a pretty sound judgment. I agree with you in that regard, that we're going to see some of these areas go back to those traditional crops. Wheat's been trying to price itself out of the feed bunk against corn here and move that off that demand side for the feed usage side. So, the USDA made some adjustments on that here at the last report, and I think that's going to continue to be that way. Those acres are going to be vital, especially in those northern tier regions because of the issues and a lack of production last year. So that's a definite piece to the puzzle here. That's why we see corn react very strongly with wheat. When wheat prices kick in, corn's following along because corn wants to hang on to those acres and not give it to the wheat market back. That's going to be very interesting to see how that shakes out as we move into the first half of 2022 when it comes to that planting mix and where we are on the acre front.
Crude oil, we broke below $80 a barrel this week. We've kind of been chopping around right around that mark. What are your thoughts with what's going on in this crude oil market? I know there was some announcements about releasing some oil from the strategic reserves as well.
That's going to be something that's been very close to watch right now. We got a bit of a rounded top action kind of happening in crude here as prices have looked, they've gotten a little bit tired here the last couple of weeks. We'll have to watch the close here, especially going into the end of the week and what the weekly charts look like. You again hearing the Biden administration continue to talk about how we can get oil moving, releasing product from the reserves, things of that nature. We're doing everything we can except maybe try to pump more oil here in the United States. But the market's getting a little cautious of it at this window that maybe supplies are going to start increasing a little bit globally. That could be a little bit of a barometer for the rest of these grains too. How does that relate to the ethanol market? How does that relate to the bean oil market? If we see some weakness there in that crude. Now we've kind of had a counter rally this week in beans versus that oil. So, maybe it's a spot here where it's just one versus the other is going to break off and have a little divergence. But yeah, those outside markets are something I'm really watching between either that, the US dollar, what's happening in the equity markets overall, especially going from now into the end of the year, which a lot of things can happen as we move towards the end of a marketing year.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk Live in Kansas City for the NAFB convention this year. John, let's flip over to livestock. Let's talk cattle. Good export sales report for the week here on the cattle side. China bought like half of what we sold this week, which was big to see. And I think as well, with cattle, watch at Feedlot Country this week. We got a buck or two higher here on the trade today. So you look at cattle, though, futures board still kind of chopping around, mixed today, too higher. What do you see it in cattle here as we near the end of the week?
We got a couple things coming into play. First off, cattle and feed report coming out tomorrow,
yes,
so we'll have to keep an eye on what's happening there. We're looking at cattle numbers to be about 99.7%, just slightly below last year. But within those numbers, take a look at the 120-day plus cattle. Where are they going to be? Expectations a couple percent over last year, and that's just a product of the slow slaughter chain in terms of its speed. We're killing about 120,000 head a day, and that just continues to back up the cattle. Now, it's been encouraging to see a little boost in the cash market. We typically are strong in the cash market till the Thanksgiving window, and then we kind of have a bit of a seasonal peak. So we're going to watch that closely. The last thing with cattle, even though that export demand is great, and it's great seeing China step in and look at buying U.S. beef, which is obviously extremely encouraging. I'm a little more focused on the U.S. consumer. Retail beef prices are at multi-year highs. Where consumers concerned about the dollar and inflation and things of that nature, where's that money going to go? That's concerning the market as we watch those carcass values continue to tumble here in this window. So I'm a little cautious cattle here that maybe we're again putting a little bit of a rounded top in. If you look at the charts, that we just can't get today positive cash news. We're a little bit higher, but we're not taking out any new highs. So I'm a little cautious again going into the first of the year there, just because of those cattle numbers, those heavier weight cattle.
Well, I think as well, with the cash numbers in cattle, we're getting a little higher each week, maybe not as high as we wanted to get this week, but futures really aren't moving in relation with cattle right now, or with cash cattle trade right now. It just feels like futures are hanging back because it's like they need more confirmation of the strength that we have seen there. I mean, to me, that's a little bit of a head scratcher. Maybe you have a different thought on that.
I think that really comes down to what we see in the cattle numbers and, and the fact that the packers don't have to chase after supplies. They don't have to bid up. And again, we're looking at an oligopoly type operation, basically 3 or 4 major firms competing for cash cattle. And obviously after the direct trade, there's just not a lot of meat on the bone out there for producers in that that regard. And if we got cattle numbers and there's no demand for them because the supply is comfortable, that keeps just a lid on prices. So that's one of the biggest factor I think this market's looking at. And now again, we're looking at that seasonality and caution coming in here. I'm not saying this market's going to roll over and fall apart, but to go from, we're February contract 137 window today, if it fell back to the low 130s, it wouldn't surprise me, and then maybe set ourselves up for a spring run, just maybe a little bit of reflection of those tighter supplies, and when we get that grilling demand kicking in as we get through the winter months.
Feeders up triple digits today. There's some decent strength there, but I think a lot of that probably attributed to, even though corn's only down slightly today, still, anytime feed price is lower right now, we're gonna have some room to have some strength in feeders. Yeah,
I agree with you there. I mean, we got a little bit of a pullback and off the highs, and realistically, corn kind of didn't follow along in that rally yesterday. If you think about it, finishing 3 or 4 higher across the board, softening off the gains. Just feels like there's some sellers on top of the corn market, so maybe that's giving the feeders a little bit of optimism. Plus, the charts look pretty good on feeders. Pretty big reversal here a couple of weeks back, and we've just been consolidating at the top of that. A little pop out on that today. Some of that's reflective of the tight supplies that we could be seeing here later into the first part of the 2022. So we'll have to kind of see how it plays out. I think a big factor is going to be what do we see with those deferred live cattle prices and how that plays out in helping with those feeder cattle and those prices as well.
Hogs real quick, quietly higher today. Really just quiet trade. We had that good day earlier this week. I think it was Tuesday, but then just kind of been chopping around once again. What are you seeing on hogs?
Cash market needs to find some stability. That's what I keep looking at overall. It just does not want to find traction. Midday carcass values were $12 higher today. Strong belly, strong ham, primal cuts values today. We haven't been holding those gains, and the cash market just doesn't seem to want to get any traction here. Still like the little uptrend we got going in February. Maybe we can get another couple bucks out of it here on just some technical buying, but at least until we see that cash market break around here and get some going the other direction, hog markets are going to be limited.
John, any other final thoughts you have for us here on this Thursday as we take a look at the landscape heading into the end of the week? I know as well, going into next week, holiday season, it's going to be a quiet time, but that could also lend itself to some volatility, can it?
Yeah, holiday trade's always a little bit interesting. You just don't know how the market's going to act because the players are down in terms of numbers, and if there's not enough bids and offers to support markets, we can see them run either way very quickly. So we'll have to kind of watch the news, see what's happening in that regard. Take advantage of opportunities that are out there. I still want producers thinking about selling incrementally into the strength. We get a little boost in prices, move out a few thousand bushel. Just build your base and take advantage of what's a good opportunity out there. Even if prices go higher, you still got more bushels to work with. So, just be disciplined and focus on some targets going forward. And when you get those targets, don't be afraid to pull the trigger and move those bushels.
John, I know we talk about this all the time, but you and the team, Brian and everyone there at Total Farm Marketing can help out folks if they got questions, if they need advice. What's the best way to do that?
Again, love to have somebody shoot me an email, jonh@totalfarmmarketing.com, as well as give me a call at the office, 800-334-9779. Don't forget about our website, totalfarmmarketing.com, as well as a mobile app. Search for that as well. A lot of great information there for producers to take advantage of free of charge. Love to chat with you. No commitments. Just let's talk markets and strategies.
John, appreciate the time, seeing you in person. Safe travels back to Wisconsin, and we will talk to you next week.
Safe travels to you, and talk to you next week.
That's John Heinberg with Total Farm Marketing joining us here today live in Kansas City during the NAFB convention on Market Talk. Coming up tomorrow on the show, we will catch up with Kent Beadle with CHS Hedging. We'll talk about the market action as we wrap up the week and look ahead to next week with that shortened holiday week. And as John and I were talking a little bit there, volatility, it's always interesting to see what happens during a holiday week. So we'll talk about that more coming up tomorrow with Kent Beadle from CHS Hedging. We'll also have a few other updates from the NAFB convention coming up here the next couple of episodes as well, tomorrow and on into next week as we work through the holidays with Thanksgiving coming up. We'll be bringing you various updates here from NAFB in Kansas City. Find us online, markettalkag.com. That's going to do it for the show on this Thursday, November 18th. I'm your host, Jesse Allen. Thank you so much. Wishing you a great rest of your afternoon.